Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The dollar index slipped back below the 100 level at the start of the week as traders weigh rising tensions with Iran against hopes for a potential ceasefire. President Donald Trump issued a fresh ultimatum over reopening the Strait of Hormuz, even threatening strikes on Iran's infrastructure, though negotiations are reportedly ongoing. By the close, the dollar held near 100. Markets are now pushing back Fed rate cut expectations to late 2027. WTI crude is holding around $101, with markets sharply focused on geopolitical risk in the Middle East. The potential closure of the Strait of Hormuz has intensified supply fears, pushing prices higher after last week's sharp rally. While some vessels have resumed passage, uncertainty remains elevated. On the supply side, OPEC Plus has agreed to a modest production increase, but Saudi Arabia's aggressive pricing signals strong demand expectations. Gold is trading near $4,705. Despite escalating geopolitical tensions, prices have struggled to break higher as fading expectations for Fed rate cuts continue to weigh on bullion. Inflation pressures are building, with US input costs hitting multi-year highs, reinforcing a higher for longer rate outlook. At the same time, safe haven demand remains strong amid Middle East uncertainty. This push and pull dynamic is keeping gold range-bound for now, with traders closely watching upcoming CPI data and Fed minutes for the next directional breakout. Yen pushed toward a one-week high in early Asian trading, hovering just below the key 160 level. The move is supported by weak domestic data out of Japan, where household spending continues to decline on a yearly basis. Although there was a slight monthly rebound, it fell short of expectations. Ongoing geopolitical risks are also weighing on Japan's outlook, given its reliance on Middle Eastern energy imports, reducing the likelihood of near-term rate hikes from the Bank of Japan. Euro is trading steadily around the 1.16 level as markets remain cautious ahead of Trump's deadline on the Strait of Hormuz. Any escalation could strengthen the dollar through safe haven flows, putting pressure on the pair. However, the euro is finding support from a more hawkish European Central Bank outlook as energy-driven inflation in the Eurozone continues to rise. Markets are now pricing in 2 to 3 rate hikes in 2026, marking a notable shift from earlier expectations of policy stability.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.